around 520 to the dollar. So they felt, well, all hope is lost. For those of you that understand the markets, a few of you always say this is the time to buy into the market.
Yes, I would say this is the time because when you look at in terms of fundamentals and also the macro factors, both monetary and the fiscal policy, we've seen in the last 1 or 2 months, the fiscal authorities have been consistent in terms of their policy. I think 2 weeks ago, the acting president also signed 3 executive orders on ease of doing business. The budget has also been will be signed anytime soon. These are some of those things that will give a significant boost. You spoke about the collateral registry act that was also signed yesterday. So if government is able to build on this and there's no policy reversals, also the CBN have seen how interesting this window is working. If they can just build on that gains that we've seen, allow markets to play out within the I&E window, while as we progress, we would expect a convergence of the FX rates. We feel these gains would be sustained because when you also look at fundamentals of even the banks, we expect that impairment charges shouldn't be very significant this year. Some of the loans that were, as at last year, were not performing as a result, or especially the manufacturing sector, because of lack of FX liquidity. For some of them now, that has improved, and they are able to also import raw materials and produce. In terms of volatility of the FX, has also been very stable. You're able to predict within 2-3 weeks. If you import, you're able to determine your cost of sales and how much you sell. Not like before you pay your supplier, you're already out of the money. Some of those shocks are what investors don't like, uncertainty. Yeah, so those are some of those things we feel the government is trying to deal with now, and is helping and building momentum in terms of confidence within the economy.
Yes, the banks and maybe some insurance stocks will give me some measure of liquidity, the float that I need. But let's take a bit of the consumer and industrial goods where the brick and mortar really is, whether it's Dangote Cement or Lafarge Wapco or the Dangote Sugar or Honeywell Flour or Nestle and the likes, and we say, look, what do you comfortable with the earnings per share, the price to earnings ratio, the price to book value of this of these stocks within this space where day-to-day human government, everybody's activity is concerned, whether you're eating bread or you're building a new house or you're constructing a dam or you're building bridges? Yes,
I feel some of the newly introduced policy of the federal government would also favorable to some of the consumer goods, the social investment scheme. It may look small, the 5,000 naira, but we expect most of these people that receive these funds are not going to fix this money in the bank or keep it. They are going to spend. So when you look at in terms of velocity of money, their demand, purchasing power would increase. And when you look at, so it means, take for instance, the average, if you're the average seller of the average owner of a restaurant, you sell rice, the demand for your food would increase. So when you go to the market, the number of bags or the bags of rice that you also buy also increase. The farmer would also see that signal, and increase in terms of production would also increase. So as we progress, there's a lag. Like the lag effect, it may take 6 months to 1 year before we begin to see that impact. But as we progress, when the budget is also signed in construction, you have Julius Berger, you have some of these construction companies within this space are also going to benefit from what the policy of the government. At the hard rake, you have the Presco, you have the Okomu Oil. Most of the manufacturers are looking inwards because of the depreciation of the Naira, trying to see if they can purchase their raw materials within the country, sign off-take agreements with some of these suppliers. And as that progress is going to also help in terms of improving the earnings of the companies. And part of what some of them had to deal with last year was the FX volatility, which we feel has minimized to a large extent this year.
If I look at the PE ratio of the market and where we are in terms of core numbers, 10.1 10.2, thereabout, trillion naira. 10 years ago, we're just about 16 trillion naira in market cap. You think we still have room to grow this 10 trillion?
Yes, I feel if this positive momentum continues, we should still be able to do another 1 to 2 trillion naira. When you compare the multiples, the whole market with some of our peers, the Ghana Stock Exchange, it's around 18 times price to earnings, 18 times. You look at the Kenya market, around 19 times. We are still around the 13 average PE, or 13 times. That still shows that there's still room for growth.
Room for growth. If you look at the market fundamentals, do you believe that the market fundamentals had always been right? We're just waiting for the economic fundamentals to match it. Then off we go.
Yes, market fundamentals to an extent have also been right, but because we know that some of the economic fundamentals will also affect the fundamentals of these companies. So you can't dissociate or separate whatever is happening from the economy also from the market.
We can't do that. I'm very happy you're sounding really optimistic this morning. I'm sure a lot of folks will maybe will be looking to buy into your optimism. Thank you very much for coming. We really appreciate that. So where do you see the figure at the end of the year as far as market cap is concerned? We think we can add 1 or 2 trillion naira? We've added 1 trillion in just 20 days.
Within the period, we should be able to add the 1 to 2 trillion, depending on government should now see that it's key, whatever statement or policy that is introduced, reaction is very important. So they should consider and be sure that this is going to build on the gains that we've realized in the past month.
Don't spoil the party, isn't it? Yes, that's the message to the government. Don't spoil this party. Don't spoil. The party on Broad Street is really, really interesting. Ayodeji Ebo, thank you very much, Managing Director and Chief Executive at Afrinvest Securities. Don't spoil the stock market rally, 1.2 trillion in just 20 days. That's a whole lot of money, even by today's exchange rate, isn't it? That's about, how much is the budget for 2017, really? We've made about 1.2 million. That's the market is working. So, keep it there, everyone. Let's come back after the break. Today's the final trading day in the month of May. Let's check in with the opening bell and the opening numbers after the break.